Welcome to the weekly option. This is your host Eric, and I'm going to use this video to walk through the trades for this week. So we start off with our covered call on Microvision, and this is a stock that has had a lot of activity this year. Look at this. I mean, these are big swings, pushing kind of lower, but it seems to be establishing a little bit of support. And we've come off of that support right now. And so what I'm looking at is owning this stock, right? Buying the stock and then turning around and selling this 18 call, so that we're just about at $18 right now. So this is really an at the money, almost in the money call option. And you're going to collect $3.40 for that. You actually could put the trade on pretty well for selling this 19 call as well, but I like selling the at the money strike, even though we're only 3 cents away. This is more than enough return on this $18 stock. So to collect $340 on $1,800, we can do the math real quick. Gives you a nice almost 19% return, 18.88888 or whatever. So 19% return. You could probably squeeze out an even better one. Let's do the math on the 19 strike. So we're gonna do if the stock were to bounce to $19, you'd collect another $1.03 plus that $320. Let's see, 103. So that's $423 on a cash outlay of roughly 18. That'd be 23.5%, assuming that you get this dollar pop in the stock. So stock is a bit volatile, but I do like the idea of owning that stock and ultimately selling that really expensive call option against it. And it's a 4-week trade, right? May expiration is 4 weeks from now. So that's it. Let's take a look at the next trade this week was on Mosaic, and I'm using TradingView software right now. So here's Mosaic. It's been sort of grinding higher. It's sitting at a little bit of resistance right now, but it looks like it could pop through it as well. And for Mosaic, we looked at selling a spread. So I'm going to make sure I do this over to May 21st expiration. And we looked at selling this put spread, the May 33 half, 33 put spread. So you'd be selling the May 33 and a half put at $1.57 and then buying the May 33 put for $1.39. It's a 50-cent spread. So that is the maximum value of the spread. And you're collecting 18 cents for selling that spread, which I think is a decent amount for selling that spread, especially given that the stock has just been kind of grinding higher and appears like it's going to keep. I mean, that's a nice chart. I certainly wouldn't be. I think if you listen to the show this past week or this weekend, I talked about trading on the side of strength. Doesn't mean you're always going to make money correctly. And the challenge with options, of course, is that you have to be correct both on the direction and the timing. But that being said, I still feel like the strength in this one is still to the upside, and therefore I'm happy to sell a call option against it. And then for our final trade, we looked at good old GE, right? General Electric. And again, this is another stock that has been kind of hitting some recurring highs here, right? Hitting a little bit of resistance, but it seems like there's still strength in this market to push through it, especially over the next 4 weeks. So looking at buying a spread in GE, let's make sure we get the right expiration, May 21st. Buying this call spread, the 13 half call spread. So I would pay 92 cents to purchase this spread. 92 cents to purchase the May 13 call, and selling the 13 half call for 60 cents. And that's paying 32 cents for the spread. That's going to be worth 50 cents if stock remains above $13.50. So that's a nice little return on your money, making 18 cents on 32. Let's see, a cash outlay of 32 cents gives you a 56.25% return on your capital invested. So that's it for this week's show, this week's trades. Thank you guys so much for watching the video, for listening to the show. Hey, if you haven't already subscribed to this YouTube channel, please click the subscribe button, and I'll be really happy. So thank you so much, and happy trading.